down and stopping me out for a full contained loss. Once again, this is not a perfect going to win every time strategy. That doesn't exist. What does exist is allowing winners to run, keeping your risk contained, and keeping a uniform structure and approach that you can, once again, measure the outcome over time. So once that failed, I was watching these lows, seeing where my consolidations were. I saw that this area was a high impact sell area, so I marked off my zone into this previously important area that flipped, took my entry, set up my 1 to 4. At this point, I could reduce my risk to break even, and then price ended up coming up to retest that area. But because my risk was at break even, it was a 0 loss, 0 win. So if it continued to move in my direction, great. The fact that it didn't, okay, I had no win, no loss. On to the next trade. So I let the market develop a little bit further. I identified this key area. Price retested the opposite level of here into this key area. I took my entry here. Price continued up, hit my 1 to 4. Another beautiful trade. So far I had my plus 7R. I had my loss here, break even here, plus 4R here. So by 4 o'clock at the end of the day, I've been able to net out 10 risk factors. If I was risking $100 per trade, this would be the outcome of just one good trading session. Now, of course, there's going to be days where you find no setups, or basically it's just all losses. That is all part of the trading game, which can throw a lot of people off the beaten trail because people don't understand the significance of testing things over time, which allowed us to actually build, based off of data, our own custom indicator, which can actually give us direct signals on key opportunities. You can see I have this diamond here. This is the exact entry for the day. I see a diamond, I take the trade. That's the big R trade of the day. On the previous MES example, you can see we have our long indicator here. First trade opportunity, full winner. So studying the data can add what are called confluences, which can give you higher conviction of the area. This is all stuff that we're working on the private side of our trading team, just so that you understand what I mean by the data findings. When we were first designing this model, this is the 3-month, technically 303 trade data backtest, where we actually went through all of these signals, managed the trade exactly how we said, which gave us an indication that even though we have back and forth, up and down slightly, this was a positive equity curve over time. Now, this is a model. Everything is going to look better theoretically, and then as implementation in real life actually happens, the result is obviously going to be less glamorous. You can see there was a significant amount of losses. The data showed us that this was about a 36% win rate, which is showing us that effectively 64% of the trades that we're taking are statistically likely to be losers. And just to be clear, this doesn't indicate the expected performance. This is just a model for us to understand how this is going to look over time and if it's worth pursuing with consistency and risk management. But this is exactly what led us to have conviction in this model to actually take it to the next stages of testing it in real time, which as professional traders saves us a ton of time because we're not executing, guessing, hoping that something works long term. We can actually look at models to give us a good starting point.